Thursday, March 7th, and I've lost about $500 out of the account here worth of value. So I'm going to take you through some of the most active stocks and positions that I have, and we're going to talk a little bit about hedging and why hedge and how I've hedged currently against anticipated market downturn. So let's take a look here. EXK, of course, a big mover always. One of the most volatile stocks that I own is down 2.7%. Apple is down over 1%, which was a big loss. And in fact, what would help you guys more to see the biggest difference makers is if I make it into dollars, into dollar amount, so you can see. So today's return, you can see I've lost $84 worth of value from EXK, 186 from Apple, and then Spotify, another $50 there. This is my market short, SH. It gained $22 because markets were down today in general. And then we have wheat and precious metals in a positive territory, $24. And you can see the Russian market is down $73 as well. And C-SPAN, another $46 there. So many of the positions are suffering losses. Energy fuels, negative $54 as well. And chemical, $13. URA, $23. So a lot of movers, and collectively they've lost me about $500 worth of value. So, but that's okay. I kind of anticipated this account correction. I've been talking about it for a while, and you can see it started. Now let's talk a little bit about hedging and what I've done here, because I was 100% long here. If we go back to the all-time chart over here, back at the bottom, I was saying how I think the losses were limited and how I'm gonna go pretty aggressive, and I have been. And now that I've had this big uptick here, I'm starting to hedge some of these positions, but I don't want to go outright short the market. It's very difficult to be net short. So I still have a lot of long exposure through Apple and through other means, but I have hedged my bets, right? I've hedged my bets a little bit now by purchasing this SH, which is a market short. And basically what that means now is that I'm betting on Apple and my other longs performing better in the downturn, right, than the overall market, and the overall market performing worse in the upturn than the stocks I hold. You can also consider the precious metals as a hedge as well, although they're not a perfect hedge. They're just not a very correlated asset, so it can be used to offset some of the risk. So that's what hedging really means, is that you're offsetting some of the risk in your portfolio, right, in your account. Another bet that can be used as a hedge is what I talked about earlier, which is PPL. It's a utility company. As you can see today, the markets were down, but they're kind of up a little bit. So it's not as correlated as the market, and therefore it can diffuse the risk a little bit of the portfolio. You don't want, especially if you think there's going to be a downturn, you don't want to be so concentrated and so bullish and just unnecessarily write out downturns in the market. Something else that's can be considered a hedge is this ultra short duration ETF for treasury notes, and it's a very stable thing to buy. As you can see, it's up about $4 today, and I've gained about $16 or 0.08% since I've held it, and I bought it on February 19th, so quite some time ago now. And considering the amount of money that's in there, almost $22,000, it doesn't move much, right? So it's short-term treasury notes, and it pays obviously a dividend. You can see it here, $21. But that's not for the full amount. It's $21 for 235 shares. I have 435 now, so if you were to have a payout, it'd be larger than this now. Okay, so these are the hedges. That's what hedges means. It means that not either non-correlated assets or just something that helps you diffuse the risk, right? something that will help you prevent piling up on more and more losses with just a single position. So if I had all Apple, then my entire account would be down 1.16%, but because I don't, it's only down 0.9%, 1%. Or if I only had energy fuels in my entire account, I'd be down 3.15%, but I'm not, right? It's only 0.9. So it's a way for you to kind of exercise a little bit of wealth preservation rather than just going, balls out, all risky, very concentrated bets. Now, obviously, both strategies work, but what works the best for me is I found out that if I think that the market's about to have a downturn, I go into more wealth preservation mode, and then if I think that the market's sold off already so much that the downside risks are very limited, like in some of the precious metals, I think, especially silver has very little down risk, maybe a couple dollars, that's about it. Then I'll go a little bit more aggressive, right? So, well, EXK's had, precious metals, especially silver and EXK's had a little bit of a run up, and I've reduced my position, but that's not the point. I'm talking a little bit more long term right now. So, hopefully, I helped you a little bit understand what hedging is all about, and I've showed you some of my hedges so you can understand how it functions within this account. And I've also updated you on the performance, which is not looking that good, but it is anticipated, and hopefully after a little bit more correction, I'm looking to go really, really aggressive into an Apple put sell. So that will be coming up. All right, hopefully that was informative. That's it for now. I'll see you all tomorrow. Peace out.